Good evening, friends. Welcome to Nifty Indicators. It's easy to make money. It is easy to make money when we are committed, when we are disciplined, when we are organized, and when we properly follow the indicators that suit us. Yesterday we saw open interest. Open interest is a very important factor in option trading. Continuing with that, open interest is important because unlike the earlier days, that is when I'm talking of 80s and 90s, etc., it was basically investing short term, long term, or even, for example, day trading on cash. There was no F&O. Once the F&O started in 2000, June 2000, then lot many technicals came into picture. One of the most important thing was open interest. Let us look at the PPTs and then continue with our discussion. Today's major point is PCR and max span level. PCR and max span level, when you are talking of, it is basically we are talking of the options open interest. Say Friday's options open interest levels. How do they help us? Say, for example, if you see the maximum calls written are 17,500, 5 crore, 81 lakh, 68,250 calls of 17,500 are existing at the moment. Whereas puts, maximum puts written are 17,000 puts, 3 crore, 63 lakhs, 10,400 puts are written. Now, how does that help? What actually happens is, mostly market is managed by the money and power, the liquidity. The liquidity is in the hands of big people, the call writers. Mostly the call buyers are small retail traders. So it is given that 5 crore 81 lakh 68,250 calls are written of 17,500 strike price. That means the money bags believe market is not expected to go above 17,500 by this weekend. These open interest figures are of this weekend, that is coming expiry, see, weekly expiry of 20th. So basically by this Thursday, Nifty is not expected to go above 17,500, meaning 17,500 is the resistance for the time being, and 17,000 puts are written, expecting 17,000 to be a strong support. This is also exhibited in the option chain. This is the option chain. You can see here option chain. What it suggests, same thing, 17,500 calls and 17,000 puts are written, the maximum amount. As such, 17,000 is the strongest support at the moment, and 17,500 calls are written. So 17,500 is the resistance for the time being. Now let's move on to PCR. What is PCR? PCR stands for put call ratio. Simply put, the total puts existing divided by total calls gives us put call ratio, PCR. It's a simple mechanism, but a very important and very powerful tool. Put call ratio keeps moving up and down depending on whether there are more puts written or more calls written. If you see, for example, on Friday up to 12 o'clock, puts were not being purchased. There were more puts written because market is going up. And after 12 o'clock, there are more calls written because market is going down. Meaning, put call ratio is suggesting simply when the PCR is above 1, market is showing strength. When PCR is below 1, market is showing weakness. So in the morning and up to 12 o'clock, market was showing strength, and after 12 o'clock till 3:30, market has been exhibiting weakness. That is what the PCR is saying. PCR is very important most of the time. One more tool that you can use, especially closer to the expiry, is the max pain level. Max pain level, the theory says closer to the expiry, the total number of puts written and total number of calls written considered, market will move towards and try to close closer to the point where option writers can inflict maximum pain on the option buyers, and that is calculated by, at any moment, the existing total calls and total puts and multiplied by each strike price and existing amount of calls or puts, and calculate what is the amount that has to be paid if Nifty or that particular stock, in this particular case Nifty, if it is to close at a particular strike price, and whichever strike price shows at that point, that is the point where the option writers will have to pay the least, or that is the point where option buyers, that is retailers, are inflicted with maximum pain, is where Nifty is expected to expire. Presently, it is 17,200. So, closer to 17,200 is market expiry, weekly Nifty series expiry, is expected for the time being. It will keep changing during every minute of the trading hours. We have got Monday, Tuesday, Wednesday, Thursday, 4 more days of trading. So obviously, max pain level, PCR, and open interest will keep fluctuating depending on so many factors. So closer to expiry, whatever is the max pain level, Nifty is expected to expire closer to that, and that is being guided. That is, we can be guided by open interest levels, PCRs, and max pain level. This is true for index, any index for any of the indices for that matter, or any of the stock. And most of the brokers will give us what is the max pain level of any particular stock, or what is the PCR of any particular stock for any strike price. Try to learn, try to follow this. You will be glad you have learned this. If you have any doubt, I'm very sure a lot of things what when I talk, probably quite a lot of things may not be very easily understood. Maybe there are doubts that you have. Feel free to call me or log on to NiftyIndicators.com. My mobile number, NiftyIndicators.com's address is displayed here. Either log on and raise your query, discuss with me, or call me to discuss, solve your queries, to solve your doubt. Feel free to call. Take care. See you again tomorrow. Till then, take care and God bless you. Bye bye.